Hey guys, do you own index funds? Is index funds a part of your investment strategy, your investment portfolio? Let me know in the comments below if you actually own index funds. And if you don't own index funds, why not? Is there a particular reason why you don't invest in index funds? Drop that in the comments below for me, guys. Now, in this video, I just want to quickly have a conversation with you guys about why you need to be investing in index funds. Especially if you're a new investor or if you're an investor who doesn't necessarily want to be picking individual stocks and doing all the research that it takes on individual stocks, right? And that's most of us, right? Most of us really don't want to do all that. So index funds is a really, really good option for most of us. And a lot of people aren't investing in index funds. And, I'm curious as to why. Because index funds, to me, are one of the absolute best ways to get into the stock market. And I want to give you the 5 advantages of investing in index funds on this quick video. So let's jump right into it, guys. The first reason you want to make sure you have index funds as a part of your investment portfolio is just flat out the lower fees. It costs less money to own index funds than most other investment vehicles when investing in the stock market, because index funds are considered to be passively managed. Index funds do have fund managers, but it's more passively managed, right? Now, a regular mutual fund, which an index fund is just a type of mutual fund, but a regular mutual fund is said to be actively managed, which means those fund managers are really doing a lot of the picking and pulling from that bucket of stocks, right, for a regular mutual fund. So the fees for that is more. It's higher for a regular mutual fund typically than an index fund. But fees have a way of eating at your profits, right, that you make on your, say, mutual fund when the fees are higher. So with an index fund and lower fees, there's lower fees that are eating away at your profit, meaning a better investment for you, the investor, right? Index funds are sort of hands-off for the fund managers, whereas regular mutual funds are sort of hands-on for the regular managers, right? But overall, the result is for the investor, lower fees. We pay less for the index fund than we pay for a regular mutual fund. So that's a really big advantage because it's more money in your pocket as an investor. And it's also why when you're actually doing your research on what index funds to actually invest in, you want to look at the expenses, the expense ratio, right? Now, let's jump into number 2. The second reason you really want to make sure that you own index funds is because index funds offer a little bit lower risk, right? And the reason is because index funds are pretty highly diversified, right, than, say, an individual stock. With an index fund, you have a bucket of stocks. Maybe there's 80 different individual stocks in that bucket called an index fund. Or there may be 500 stocks in that bucket. Or if you invest in an index fund that is a total stock market index fund, you might have more than 3,000 or 3,700 different individual companies in your bucket called an index fund. And being highly diversified means that your risk is a little bit lower. The volatility is a little bit lower when you own 100 stocks than if you only own 1 or 2 individual stocks. And so I like that about index funds, that, hey, a little bit less risk for the regular average investor like you or me, right? Super important to be spread across. What's the one thing we always talk about in investing? Diversification. Guys, if you get any value out of this video, do me a favor. Please smash that like button below. And also share this video with your family, your friends, or your network of good people. And if you're new to my channel, please consider subscribing to my channel. Now, let's get back to the video. Now, let's go to number 3. The third reason, the third advantage or third reason I think you need to be investing in index funds is that typically index funds outperform individual stocks. There's been many studies over the years that have proven that index funds that track a certain index outperforms you trying to pick individual companies in individual stocks, right? So the fact that studies have shown that you outperform mutual funds and individual stocks by just picking an index, why not pick an index? You can go read the studies for yourself. You can Google it and check it out, but they outperform. Index funds are a wonderful performer when it comes to growing your portfolio. So why not have this thing in your portfolio that has been shown and proven to outperform picking individual stocks? Now, number 4, the fourth reason why you need to be involved or at least have some index funds as a part of your investment strategy or your investment portfolio is really a big one. Index funds require less financial knowledge. Just to be flat out real about it, right? When I say less financial knowledge, it means with index funds, you don't have to analyze and over research. You don't have to read individual companies' 10Ks and 10Qs to go through their profit loss statement, or you don't have to read up and look at companies' balance sheets and so forth. You really don't have to do that when it comes to index funds, when you're researching or analyzing and trying to figure out which one to actually invest in. You don't have to do all that. Now, if you're investing in individual stocks, individual companies, yeah, you want to do that because you want to know what is taking place with this company. Who's growing the company? How is the company growing? You want to know all that when you're investing in individual stocks. You don't need to know all that when you're investing in index funds. Because again, index funds is a group of 100 or 200 or 400 different stocks, different individual companies. You don't have to do your research on every single one. What you're researching really is the fund itself when it comes to an index fund. So you want to look at the underlying index, right? What is the benchmark that this group of stocks is following or tracking? What is that index, right? What is that benchmark? You want to know that. You want to know what is the expense ratio? How much does it cost to actually own this index fund? You want to know that, right? You also may want to know the deviation. How well is this fund actually tracking what it's supposed to track? The sector or the index that it's supposed to track, how well is it tracking it, right? Because sometimes it does get off and you want to know that, right? They call that tracking errors when you're looking at an index fund. So you want to kind of analyze that and know that. But you're looking at the total fund itself. You're not looking at all these many hundreds of different individual companies. And then to a lesser extent, when you're analyzing index funds, you want to know the market price, obviously. What is it? What is it actually selling for? The price of it right now in the market. And then you also may want to look at the past performance, but understanding that the past performance is not necessarily an indicator of future performance, right? You want to know that. But to a lesser extent, you do want to look at how it's performed, right? So these overall indicators of whether or not it's a good index fund or not a good index fund is much easier for the average person than to be reading individual companies' profit loss statements. 10Ks and 10Qs are harder to read than analyzing a simple index fund. So it's a little less challenging for the regular, average, everyday investor when you're talking about investing in index funds. Now, number 5 is this. The fifth reason why I believe all of us should be investing in index funds is simply convenience. Guys, with an index fund, you can have all of your favorite types of stocks bundled into one bucket, and you can invest in that one bucket called an index fund. Or maybe you are really familiar with a specific sector of the market. Maybe you work for banks for a lot of years and you know a lot about banks, and maybe financial institutions, the index funds that have the stocks in the bucket that are financial institutions, maybe that's a fund for you. Maybe healthcare is an issue that you know about, you understand, and there are index funds that are primarily focused on healthcare, right? Whatever your favorite sector or index is, you can invest in that. It's convenient where you don't have to go out, if you want to deal with healthcare companies, you don't have to go out and analyze 100 different individual stocks from individual healthcare companies. You can just buy the index that's tracking them. Convenient for us, the regular, average, everyday investor, right? Maybe you want to only follow the S&P 500. Well, there's many different types of follow and track that benchmark that sector called the S&P 500. Or maybe you want to invest in an index fund that has 100 different stocks in it and they're all weighted equally, right? There's index funds that you can actually invest in. The convenience of index funds, it takes a lot of the extra legwork out of it for us individual investors. So that's my 5 reasons why I really believe all of us should be adding index funds to our portfolio. So hey, check out a broker, Vanguard, Charles Schwab, E-Trade, Fidelity, right? Whatever it is, Open up a brokerage account and start researching some of the index funds that they have available for you. Now, I'm a big fan of index funds. I'm also a huge fan of ETFs, exchange traded funds. Now, if you want a breakdown of exactly what ETFs are, how they work, and what are my picks for the top 3 ETFs that everyone should consider owning, if you want to know all that, you need to check out this video right here, right now. Peace.